Hi, my name is Kayla and I help small business owners with QuickBooks Online. In this video, I'm going to show you how to record a loan and a repayment of the loan in QuickBooks Online, but that's just the software I'm using as the example. The concept still applies for whatever software you're using or if you're just using paper and pencil. Okay, so in this video, we're going to go ahead and start with just an example. So just going over the concept of why we're needing to record loan repayments differently than other expenses. So let's look at this example. So let's say that on April 7th, Sammy borrowed $868.15. But then on May 2nd, Sammy made a repayment and started to pay off the loan with the first amount of $150. So now, after that first repayment, Sammy's loan balance is now $768.15. This is because the $50 was interest. So Sammy paid $150, but only $100 of that actually went towards the loan or paying off the loan. $50 of that payment was interest. So of that $150, only $100 actually reduced the balance of the loan. So this is where we need, in our software, we need to split that repayment. We need to split the principal from the interest so that in our books, we can clearly see how much have we paid in interest and how much have we paid towards reducing our loan liabilities. Okay, so this is important because you need to be able to track your loan balance, but also that way you can give your accountant the correct amount of interest that you've paid for the year. Okay, so let's get started with making sure that QuickBooks is ready to actually record the loan and the repayment. We need to make sure we have a place to categorize these amounts in the first place. Okay, so outside of your QuickBooks, outside of your software, you'll need to know how much is interest from your repayments. So if you made a repayment of $150, in our example, our interest was $50, but you need to find out for your loan how much of your repayments actually is interest. Now, if you know it for one of the amounts or one of the months that you made a repayment, that's great, except a lot of times with loans, the amount of interest changes slightly with every repayment. It's a little different each time. So it is good to find some sort of a list, maybe if you can log into your account from your loan provider or contact them, but you should be able to get that information of with each of your repayments, that you should be able to get a list of how much was principal and how much was interest. So that's information that you'll need in order to do this. And now let's actually go into QuickBooks and make sure that we have a category or an account for the loan itself and a category for the interest for the loan. So let's make sure that we're set up for those two things so we have a place to categorize. Okay, so let's go to the chart of accounts. You can get there on the left menu by going to accounting, then chart of accounts, or you can use the gear in the top right and click chart of accounts in the first column. So somehow we need to get to your chart of accounts. So let's make sure, maybe you already have, sometimes when you set up a new QuickBooks, you have some default accounts. So let's scroll down until in the second column, we start seeing the word liabilities. All right, so we've got a loan payable and note payable. So if that, in our case, in our sample account here, there's already balances in there. So we don't want to use that. We want to have a separate row for each loan. So we don't want to group them all into one place. We want to see the balance for each loan. So these are already being used. So we're not going to use those. So we're going to create a new loan. But for you, if you just started your QuickBooks and you see that these are, these are completely empty, you could use a default loan if you'd like. So it just depends on what type of loan that you have. So you may have a default already, but let's create a new one. So we'll scroll up to the top, click new. All right, and then you'll see some circles at the top, and we're saying that this account is a liability. And where do we want this to fall on our list, our chart of accounts? So we have other current liabilities, or we have a section called long-term liabilities. This will depend on your loan. Is your loan, are you expecting to pay this back within 1 year? Then that's a current liability. If it's going to take you longer than 1 year to pay this loan back, then select long-term liabilities. So our loan is a current liability. It's going to take us less than a year. So we'll select that's the section we're going to put it in. All right, then we have tax form section. Yours might, if you're doing this, you might see it's called detail type for you. So either tax form section or detail type, we're going to select this list. And here they give you a limited list. So just select the one that most applies to your loan. So in our case, maybe for you it's a line of credit, a loan payable, or it's just an other current liability. So you could use that if you're not really sure what it is. You could always, the safe thing back up is just other current liability. So here we will select that it is a loan payable. All right, and then we will just select a name, and this is just a name that how you want it to show on your balance sheet, on your chart of accounts. What do you want to call it? So usually a good idea is just putting the actual name of the loan provider, and then the word loan, something like that. If it came from an individual person, not a company, you could put their individual or their initials. You could put their initials instead of their whole name. So just put some name that something more you'll remember for the name of your loan. Okay, now let me jump back here in case you were a situation that you were a long-term liability. Let me show you your options here. For the detail type or tax form section, you have a shorter list of options. So just again, pick the closest thing. Notes payable, that's typically you could use that if this is more of a bank loan, you could use that. But again, if you're not really sure, if this didn't come from a shareholder and you're not really sure which one to pick, you can always pick other long-term liabilities. So that will be fine as well. All right, so let me reset it to current liability for our example. Okay, we're going to say it's a loan. Okay, now this next part, before we save, there's one last piece here, and it's very small. It's kind of easy to miss, but it says starting date and opening balance. So I'm going to go over this in case you need it. Not everyone needs this. So if you do not need this, you can go on ahead and I'll show you how to, in the next step, I'll show you how to actually record the deposit of a loan. But let's say, so you would need this if maybe let's say that you started your QuickBooks account and you're only tracking your finances, your transactions, only starting this year. So it's only starting from the 1st of this year. But maybe you got this loan last year, but your QuickBooks only has information from this year. So how do we do that? So we can't record the deposit of the loan really because the loan happened last year and we're not trying to put anything in from last year. So in this case, you can just tell QuickBooks, well, what was your balance as of the start of this year? We're using QuickBooks starting just from the start of this year from January 1st. So what was the balance of your loan as of January 1st? So this is where we can enter that information. So let's say beginning of this year, beginning of this month. So depending on when you're starting to track finances in QuickBooks, you'll select that. Maybe it's just some other specific date. So you could select other dates. So for us, it's going to be beginning of this year. All right. And then here you can just put in what was the loan balance. Again, this would not include your interest payments in this. That wouldn't apply for this. This is just what did you have left to pay on your loan as of the start of this year. Now, this is where you can find that information. Again, going into maybe logging in the account of your loan provider, you can go in there and see maybe you get some sort of statements on the loan. You could find that out from there or just contact them and they should be able to tell you. If you got the loan maybe last year, but it was pretty recent, you could also kind of do the math on it. So let's pretend that you had a $1,000 loan from last year and you've only made 2 payments on it so far. And you know that the principal on those payments were $100 on each payment. So if you had a $1,000 loan, let me pull up the calculator. If you had a $1,000 loan, just so we can see it, and then you made your first payment had $100 of principal, and then your second payment had another $100 of principal. So you know that you got this loan last year, you only made 2 payments on it last year. So as of the start of the year, your loan balance was $800. So that's what we'll enter. So again, if you've had this loan for a while, or if your loan is a bit more complex, I would just try to find it out from your loan provider. But if it's a pretty simple loan, and you haven't had much activity on it, then you can try to just figure it out with just using math. All right, so here we'll say that that's our opening balance for the 800. So now we can click save. All right, we'll click save and let's scroll down to our liabilities. And where's our loan? There it is, loan provider loan. And again, you just replace that with the name of your loan provider. And let's click view register just to see what it looks like. Okay, so we don't need that. So here it's showing the opening balance as of January 1st of this year. Our loan balance was $800. And we can see that at the top, ending balance of $800. So again, this only applies to you if you received the loan in the past before you started actually tracking transactions in QuickBooks. So that's why when you would have enter this opening balance. All right, so in our main example, we're going to actually record the deposit of a loan. We got the loan this year. So I'm going to go ahead and just remove this, because this is more of a side example. So we'll remove this so we can start with a fresh example here. So loan provider loan. So right now, let's say for the people that you got the loan this year, or the loan happened after you started tracking things in QuickBooks, then you need to actually record the deposit of the loan. So let's go on and see how to do that. All right. Oh, you know what? Actually, before we do that, we need to see if we have a place to record the interest. So one more thing on the chart of accounts. Now, what you can do is you can keep scrolling until you get to expenses. You could keep scrolling, or quicker way is you've got a search bar up here. So in the search bar, we can just type in interest. Do you have anything called interest? For our example, we only have an interest income category. So for us, we need to create this. We are missing an interest expense account. So let's create that now. All right, on the right, we'll click new. And this time we're going to click the expense circle, save account under. This is under the expenses, tax form section or detail type. This is interest paid. All right, and then here we can call it interest paid or interest expense. All right, so let's click save. Now, I'm doing this because I didn't have any interest expense account at all on my list of categories. So I'm just creating something called interest. If you have other types of interest like credit card interest, mortgage interest, then you need to have a subcategory for each one of those. So let's create a subcategory for loan interest. All right, so here we have expense, save account under. Where do we want this to be placed on our list? If yours looks different when you're creating a new account, if it looks different, it might be that you need to check off a box called sub account. So check that off. But in our case, we're going to just open up this list. All right, and we're going to come down so we see interest paid. So under interest paid, and it is an interest paid type of account, we're going to call this loan interest. All right, so this will be, and if I scroll down, you can see a preview. So on our profit and loss report, on that profit and loss statement, you're going to see interest paid in your expenses, but indented underneath, you'll see a category just for loan interest. So that's what we want if you have other types of interest like credit card interest. Okay, so now we can click save. Okay, so now we're all set up. We've got a place to record our loan. We have a place to record the interest. So now let's actually do that. So we're ready to go to step one. So step one, if you use the bank feed, so if you have your bank account and credit cards, if you have them connected on the banking menu, then this is how to do it over here in this area. If you don't have things set up, or you just need to create it manually, that's going to come later. We're going to get to that very soon on how to do it manually. So for right now, here's how to record the loan deposit in the bank feed. So we received this loan in the checking account. We're going to scroll down to find it on the list and we see a deposit of $868.15. This is the deposit of the loan. And we're going to make sure that the settings up here, the circles, that you have categorized selected. All right. And then we're going to enter vendor. Very important for keeping your books nice and clean and just preventing things from getting a mess later on, or making it easier to find things. Make sure you enter vendor whenever you're using QuickBooks. All right. So here I don't have the loan provider in my vendor list. So we're going to add this. And at the top, it says customer. This is not a customer. This is someone we're paying. So they're listed as a vendor. And you could put contact information, but you can just put the name. That's fine. All right, we click save. Okay, so we've got this filled in. So we want to make sure these two fields are filled in. And what's the category? The category is the loan. So on the right side of our list, you see income, all this stuff. We need the liabilities. So we named it loan provider loan. So this is what we're going to select. So we are going to record this deposit of the loan, receiving the loan. We're going to record it to this loan, and it should say liabilities on the right side. It shouldn't say income or expense. It shouldn't say anything else but liabilities. All right, you can always put a memo, put any notes you need to make about this loan, and we'll click add. Okay, so let's see what that looks like on the register. So we can come back to the chart of accounts and just see what does that look like now that we have a balance. So we've got a balance of $868.15. We can click view register and we can see this loan has increased. So the liabilities of this business has now increased by this amount. So this business owes this amount. And let's come back now to the bank feed. So now we've received the money. Let's say that it's a month later, and now you're ready to actually start repaying this loan. So now we're on to step 2. Now, before I actually show you step 2, I'm going to show you the wrong way. So let's say that we used the credit card and we made a repayment, the first repayment on this loan. All right, now because it's sample company, it's saying this description. So just for the sake of this example, ignore the description. So we'll just say, pretend the loan provider's name is here. Okay, so we're going to click on this row, and this is $150 to the loan provider. So we're going to say that that's the vendor. But again, I'm going to do this the wrong way. So let's say that, okay, we know this is $150 for the loan. So we just select the loan, and we just put all $150 right into the loan. So let's see what happens when we do that. So this just seems logical. Why not do that? You paid it to the loan, so there it is. But let's see what happens. So here, all right, so originally we had a loan for $868, but we put all $150 of that repayment into this register, into this category. So now the balance is $718.15. So it's been subtracted. We subtracted $150, but this isn't true. $50 of that amount was interest. That doesn't go towards reducing your loan. Only $100 actually reduced the balance of the loan. So we're getting a false picture here. So on your balance sheets, just for your records, it looks like you've paid off more, which is nice. Looks nice, but it's not really accurate. So it's not accurate. This is not really the balance of the loan. So we need to fix this. So we're going to go back to the bank feed. All right, and here it's not on our list anymore because we've entered it. So I need to get it back. So I'm going to go to the categorize tab on the left here, and there's what we entered. So I can click undo to put it back on the list to try it again, do it the right way. if maybe you did this a little while ago, maybe a couple months ago, and you've already reconciled, if you've reconciled this month already, don't click undo. Just click on the link itself. Click on the link, open it up, and fix it from here. So it doesn't mess up with the fact that you've reconciled that month. So fix it from here. As far as how to fix it from here, then follow the steps how to do it manually, which that is going to be, you can jump to that part of the video, how to record a repayment manually. So jump to that part if you have reconciled, or if you just need to do it manually from the start. Okay, so in our case, we have not. We just did this right now. We have not reconciled this month, so we can click undo. Click undo, click for review on the left. That puts it back on the list. And now we can start again. Let's re-enter this repayment the right way. Okay, so on our bank feed instructions, we're going to enter this just like we did with, very similar to how we recorded the deposit of the loan, but this time we're going to do a split. So we're going to record the principal and the interest on two separate rows. Now from here, we can't quite do that, but on the right side, we can. If you come down to the bottom right, click split, and then you can fill it out from here. So you can record the split. Paid to, that is the loan provider. Then row one. So row one, we have row one, this is the category. So row one, we're going to select the loan. And this is going to be principal only. All right. $100. All right, and as you can see, it does the math for you. It's showing you've got $50 left to account for of this transaction. And this is where we're going to select the loan interest expense account we created. This is the interest only portion of this repayment. That's the $50. So this totals up to $150. So that's what we actually sent and paid to the loan provider, but we've split it here between principal and interest. Okay, so this is the right way. So that way you can track accurately the balance of the loan and how much you've paid in interest for the year. So we're going to click apply and accept. Okay, so now we've recorded it using the bank feed. Okay, so now let's go over. So if you're just using the bank feed and that's it, then you can continue on to the next part of the video, the last part of the video. But if you need to know how to do it manually, this is where I'm going to show you. So let's go into this categorize tab. So again, if you're just sticking with the bank feed, you're done. You recorded the loan deposit. If you needed to, if you got the loan during this year, we've recorded the loan deposit, we recorded the repayment, we've already entered it in. But if you need to do it manually, this is the example now. So I'm going to put the repayment back on the list, come over to checking. I'm in the categorize tab. Here's the loan itself. I'm going to undo again. I can undo because I have not reconciled. So that is perfectly fine. All right. Okay, so here's how to do it manually. All right, so to record, so we're going to, for the manual people, we're going to do step one, the manual side of the instructions, and we're going to come over to the top corner plus new, and click bank deposit. So we're going to record the deposit of the loan. So let's say that we got this loan in March. All right, and make sure in the top left you see that the account is correct. So make sure which account actually did you receive the loan into. Where did the deposit come into? It was the checking. All right, now this is to do with another video for another day, so we're going to skip that section, but we're going to come till you see add funds to this deposit. So this is where we're going to fill out the same information like we did on the bank feed. We're just going to fill it out here manually. So we received this loan from our loan provider, and the account is the loan that we made. All right, so this is the deposit of the loan. That's what we're doing here. And this was $868.15. All right, we're going to save and close. All right, and now let's go ahead and come down to step 2. Step 2, we're going to record the repayment of the loan, but how to do that manually. So let's return to that plus new button, and we're going to record this repayment the right way by splitting principal and interest. So if you wrote a check, you can select check. If you did not, you can just click expense. All right, and we're going to start in the top left. Who did you pay? Our vendor was that loan provider. What account did you pay? Did you use to make the payment? In this case, it was the credit card. And when did that repayment happen? It was on, let's say it was on April 14th. All right, now if you accidentally do that, it just collapses in that area. So if you click in this section up here, it will open back up. All right, category, this is the loan. This is the principal only for $100. Our second row is the loan interest or interest paid. All right, and then this is the interest only portion of the repayment. In our case, we found out it was $50 of interest that we paid. And let's always double check the top right. The total is $150. Is that the amount that we actually sent to the loan provider? Yes. So it was $150, but we split principal from interest. So we're ready to save and close. Okay, so now if in your case you needed to enter it manually, but you also use the bank feed, so maybe with your type of business, you can't wait for things to download in the bank feed. You need to record them right away in QuickBooks. So if that's your situation, then your final step will just be to make sure to match it on the bank feed. So again, if you don't have the bank feed, you manually created it, you're done. But if you manually created it and use the bank feed, then your last step will be to come back to the bank feed when it does eventually download the deposit or the repayment. When it eventually downloads and you see it on the list, make sure to match it to what we just manually created. So we created the deposit. Now it says one match found. So we need to match the deposit we made to this deposit that has downloaded from the bank. So we're going to click match. All right, and for the repayment, let's click over to the credit card. And here, same thing. If you couldn't wait for the bank feed to download or to clear the repayment that you made, you needed to record that repayment the same day that you actually paid it. Then after you've manually created it, maybe the next day, a couple days later, once you see it on the list, make sure that you match it to the expense you manually created. So we'll click match. All right, so here, that's how to record the loan deposits if you needed, and the repayment of the loan, whether you use the bank feed or use it manually. Now, as you make the loan repayments, every month you make that loan repayment, then you'll just keep repeating step 2 until the loan is paid off. Yep, so you'll eventually pay off that loan and then you'll be done. But as you're making those repayments, you'll just keep repeating step 2. All right, and then for the people that only needed to record the opening balance because you got the loan in the past before you actually started tracking things in QuickBooks, then you only needed to record the beginning balance, maybe for the start of the year. And in that case, you were able to skip step 1. So you didn't have a deposit to record. All right, now for the final piece, so as far as actually how to do it, that's it. That's the end. It's just you just repeat step 2 until the loan is paid off. But this final part, I'm going to show you how things end up in QuickBooks. Where can you see the results of what you've recorded in QuickBooks? So let's go over to the chart of accounts. Let's go to the liabilities. And we find our loan and view register. So let's see the result on the register. So here we can see, I'm going to click date so we can see it starting at the top. So here we received a deposit, we received the loan for this amount. And then in the next month, we made the first payment. The first repayment had only $100 of principal. So then only $100 is shown on the loan. So for the loan itself, the liability register, we're seeing the initial beginning balance or the initial deposit of the loan, and then the principal portion of each repayment. And then you can keep tracking that balance until you finally have paid it off. Okay, so that's how it looks on the register. So there we can see that that is correct, but let's go over to the reports menu on the left. Let's go to reports and let's look at it on the balance sheet. So let's look at the balance sheet. That is where the liabilities, the loans are located. So we'll come down and find the one we created. So there it is. The balance is $768.15 because our first repayment only reduced the balance by $100. So there's $768.15. Okay, so that's accurate. That is an accurate balance. So now we can accurately track the loan, really get a true picture of the liabilities for the business. All right, and let's return to reports. And last report is on the profit and loss. On the profit and loss, let's scroll down to the expense area and we see interest paid. So there's our interest paid and the subcategory of loan interest, and it shows $50 of loan or $50 of interest that you've paid. So there you can get an accurate picture for your profit and loss, an accurate picture that you can send to your accountant of how much you have paid so far in interest. Okay, so that is the results on the balance sheet and on the profit and loss, and also on the register. So again, you just keep repeating step 2. So every month you make that repayment, keep repeating step 2 until the loan is paid off. All right, so if you have any questions, leave a comment and I will get to you as soon as I can. You can always contact me as well. All right, and have a great day.